Okay, welcome everyone. Welcome to the Hurley Investments Market View commentary that is not this one. It is October, the first Monday in October. Glad to have you guys here. There were 25 of you on Thursday that were attending our trade findings and adjustments. And for whatever reason, GoToWebinar had a glitch. It was not recorded. So we are going to go over some of what we talked about Thursday because another half dozen of you asked questions. So for the 24 of you or 25 of you that were here last week, I'm going to apologize because it'll be some review, but I think I want to take this to another level or give you some more understanding of what's happening and why. And hopefully that will give you some better input into what we were looking at and so forth. Maud, yes, I've got you on the list. I think I've got another problem with GoToWebinar. So everyone that's on the list is on the list. And we have like 140 people that are on the list. Some are getting the invite and some are not, but I will check on it one more time. Thank you for letting me know. Okay, last Thursday, I made the comment, there are some times you just don't trade. And I'm going to take this a little bit more. Why are there times that you just don't trade? That you don't initiate a new position, that you might not decide to start positions in accounts, even if you do have the cash. There are times when you just don't trade, and why? And yes, this is for Alan. Those that missed it, I might have been a little rough on Alan on Thursday, but thankful for him. He gave me a call back, and we were able to go through some interesting conversations to hopefully make this better for everyone else that missed it last Thursday, and I wasn't able to tape it anyway. So markets are unstable. And what was the other one? Too volatile. So I'm going to put both those together. Too volatile, or markets are unstable. And really what this comes down to, right? There isn't a clear direction or trend. Now it's interesting because someone tell me, what is the trend in our markets right now? If I was to ask you what is the trend in our markets, what would you tell me? Bearish, right? It's bearish. Secular bear market. It's bearish, plain and simple. Yet we had a 3-point up day today. So if there isn't a clear direction or trend, you don't know what you're supposed to do. It's kind of funny. Someone said markets are flat. We can trade. It is a tradable or money-making opportunity in flat markets. But it usually takes 3 to 4 weeks to identify. That's kind of funny because someone just said, who said fresh money at the beginning of a quarter can't make all markets rise? And who said dead cats don't bounce? That's kind of funny. Both of you kind of put that together. Who said the end of a quarter, new money can't make all markets rise? Who said dead cats don't bounce? All right. I'm going to go to one more point. Did you do the work to identify your best choice or decision at that time? And how far out in time are you looking? So on Thursday, we went through what the market did in the last 3 days. And it's kind of funny because on Tuesday, and I'm going to get a highlight, I'm going to get a pen. And Tuesday, I believe this was Tuesday. I really should make these comments correct. On Tuesday, which is right here actually on the 27th, we had that bump. We saw it come down and we came back up. And on Tuesday, we took off Baidu puts. Booking like $700,000 of profit on Baidu alone. We took off some extra Apple puts. We did a bunch, and then the markets kind of fell down. The markets then, do Baidu there, kind of got lost. Then our markets fell down, and on Tuesday and Wednesday, some of you asked, hey, did you make a mistake? And Alan went so far as to say, Kevin, you screwed up. You lost your shorts on Tuesday. We took off Baidu, we took off Apple. Not writing it right. And I think we took off one other one. I can't remember what we did. But we took it off, and the comment was made, Kevin, you screwed up. Right up until Wednesday, right? And obviously there was a dip Wednesday that people are like, yep, screwed up. And the point we were trying to make on Thursday was, in Alan's mind, or a couple of you touch base with me, you're like, you took off our protection that we were making more on the way down than the stock was losing. And my question was, maybe I didn't make a mistake depending on your perception. And it was, Alan, how is it a mistake to book over $1 million in long put profits and to reposition some of those, still giving you the protection? And he was like, oh, we're making dollar for dollar. So Alan, if I went to you today, then it was Bank of America. Thank you, Jim. I just noticed your comment. Baidu, Apple, and Bank of America, we took some profits on. I basically said, Alan, hey, how is it a mistake to book over $1 million in profits on, $16.5 million? Well, Kevin, you lost money. So if I was asked everyone the same question today, last Tuesday, was it a good thing to book profits on Apple, Baidu, and Bank of America? Today, you guys would all say, heck yeah. In fact, today we booked profits on Apple because they had another big drop down. And Apple, what did we book profits on? Give me a quick second. Today we booked profits on Apple, Disney, Micron, And we might start to take some others off on the banks here in the near future. And the comment that Alan and I kept going back and forth on were, Kevin, 2 days later, Apple had this big drop down. Well, yes, but we repositioned our protection. We didn't leave Apple naked, but Apple is just stock on its own today. And I said, hey, Alan, we booked over $1 million in profits. How is that a mistake? And it's interesting because it's a mistake on the education side. If you're in education, you have the ability to look back in time. You don't trade real money. You hardly ever have those emotions that are tied to real trades in the market. The only one that I know that does some is the Jeffrey Dunyon Safe Option Strategies and the Gorilla Trades guy. But I found it very interesting. And I know, Alan, we kind of butted heads on some things. The main difference between retail and educational investing versus professional investing is the time horizon. Professional investors trade for the year. We're looking at a little bit farther. We have a longer time horizon. Retail traders, including education, are typically day traders. I'm not a fan of educational trading. Plain and simple, educational trading is BS. It's theory. It's paper trading. Not saying that's not helpful, but to represent those as real trades is really garbage. It's garbage. Let me just put it this way. If any of the educations were even a tenth of what they say they are, they would make tens of millions of dollars in a hedge fund somewhere. Really, they're educators because they can't do it in real life. With that said, I need you to understand there are a ton of bad apples in my profession too. Money managers, for the most part, and I'm dealing with some people right now who literally have lost 40, 45, and 51% of their portfolio year to date. It's easier for money managers because they don't have their own money in the market. They're using the other people's money concept. Anytime you're in a fund, there are commissions involved. So don't think that all of a sudden, well, if you're a professional, you're all that in a bag of chips either. I'm doing what I'm doing because I think the professionals are crooks. They're just professional crooks. The educators, let's face it, ignorance is bliss, but you can't use ignorance as a defense in money management. You still will do your 10 years for breaking an SEC compliance issue or having disclosure where you were fraudulent. It was a week ago I thought we'd have the bounce. It looks like we're having it now. So I'm going to put one other comment in here in regards to perception and time horizon. How am I going to put this? Just going to put it like this. Timing is a fool's game. It is. If you're trying to time the market, you are an idiot. With that said, you do want to look at trends. And there's certain trends or expectations you should have to prepare yourself for runs, bullish or bearish, in your market. That's why we primarily collar trade. Kevin, what are your triggers for collar trading or protecting stock ownership? It's really pretty easy. Triggers for protection, bearish or technical crossovers. All that means is if the market's going down or a stock's going down, you put on your protection. And earnings. Kevin, why earnings? Earnings is the simple, and it's 4 to 6 week period where stocks lose 15% or more. And that's all it is. All I'm doing is I'm playing the averages. Well, Kevin, what are the averages for earnings? It's typically 2 down earnings, 1 super up earnings, and a flat earnings. Those earnings are stacked against you. So all I'm doing is I'm trying to protect through that time period where a stock is most likely to lose 15% or more in a 4 to 6 week period of time. That sometimes is the 2 weeks before earnings and the 4 weeks after. That's where that 6 weeks comes from. But not everyone pre-announces that they're going to miss their earnings and miss their earnings horribly. So this year we have gone to full collar trades where we've had some shorts on long stock positions. Right now, I'm looking for another 9 or 10% bounce up to that 4,000 range. We will most likely not achieve it really quickly. We'll probably go up 5 to 7%. I think it was 7.2%. We figured out last week where we would go up to that 200-day simple moving average. And I'll see if I can't get that enunciation. Here's the Dow. We want the S&P. It's actually the 50-day. So what we're looking for is that blue line on that black arrow I still have here. I'm going to highlight that blue line. It wouldn't surprise me to see our stocks head up and touch it. Then we'll probably run down till our elections. Elections right now look like the House will pick up quite a few seats. I heard it today that when you have less than 50% approval rating for a president, you can pick up somewhere between 24 to 36 seats in the House. I think 10 or 12 does it. So we look pretty good there in creating gridlock in Washington. The Republicans might take the Senate too. Shapiro believes that they've got a big win. Right now, the over-under is like a 48 to 52, maybe a 49 to 51, which means you don't have that same gridlock. But if you see the Republicans win the House, you have gridlock in Washington. And all that means is if they take the House, the president won't get funding for executive orders, and the markets like certainty. And certainty is that a lot of things will most not likely. There's a good double negative, right? Will most not likely get through so that we have some stability in our governments. It doesn't matter what party is what. If it was the Republicans in office for the president and they, well, currently, let's face it, Democrats own the House, the Senate, and the president. So Democrats are technically responsible for these last 2 years. They could have made any changes. They had everyone there. If it was reversed and it was Republicans, they would have been responsible for the last 2 years. if it was Republicans and the Democrats win and take the House, it still creates that same gridlock. So it's not a matter of who's winning or who has what. Gridlock in the government makes it easier to trade and invest in our stock market. So where I was going at last Friday came down to a couple simple things. And it really, another reason to not trade is, have you put the work in? And a lot of people ask, well, you know, what's all this work? What is all this work that you're doing? And it comes down to a huge amount of work. In fact, I try to put in an 8-hour day like everyone else does. My 8-hour day starts at 6 o'clock in the morning. It ends at 2 o'clock when the market closes. Sometimes it goes through the nights. Sometimes I don't sleep a night. When we have, God, was it when Trump first beat Hillary Clinton, our markets were down big. Keith and I were up all night long. But some of the things that we're doing is we're going through reviews. And so I put one in here just so you could see it. Is that it? Here is a market review where every single day they go through what happened in the market, which every single day, Keith and I are now, I mean, he hates this meeting, but we go through our percentages, we go through some positions, looking at our past history for positions we had on, and we're making our best educated guess on what's happening. I loved last month. Net, S&P was down 9.3%. We were down 1.3%. Fabulous way to be prepared for a huge down month in the market. That is net with all the money that was there. Those that own Baidu did particularly better than those that did not own Baidu. Baidu is an easy, hey, the bottom's falling out, doubled up on some puts on the way down. Those that owned Meta and Apple, we started to do that as well to make up more on the way down than the stock was losing. But right now we're looking for that bounce higher. We did not take off all of our protection today. Yes, the futures are up slightly. That does not mean anything right now. They'll have to be up slightly at 6 o'clock in the morning tomorrow, an hour and a half before the market opens up Mountain Standard Time. But yes, the futures are up right now. We will probably get some type of dead cat bounce for this week. It will have a reprieve. Our expectations are we'll start putting protection back on at the end of the week. On a down day, we will still most likely touch 3,200 before we'll go significantly above 5,000, or excuse me, 4,000 on the S&P. So all we have is this run right now that we're looking at 36.78, right up to that 4,000 level, just below the 50-day moving average of 4,006. And then the bottom should fall out. Why? Well, October's usually the worst month. September's the third worst month. And what? February is the second worst month. It's funny, I'm hearing certain things on CNBC. It doesn't add up. If I was to talk to you guys, are we in a recession? So let me ask our group, are we in a recession? Wow. I see a bunch of yeses come through. Uh-oh. I saw one no. So we've had 2 negative GDP quarters in a row, which is the technical definition of a recession. We've lost up to 25%. We've lost up to 25% in our stock market. In fact, it's kind of funny. Every restaurant in my area is packed. Can't get parking. Dang it, there's not a recession in your neighborhood. But I bet if you ask the restaurant owner if they're making more money now than last year, you might be surprised. I found it interesting that earnings estimates are going down, earnings for the S&P is going down, inflation's going up, 2 negative quarters in a row of GDP, and people are discounting, no, we're not in a recession. We are in our recession. Our GDP number that came out on Thursday the 29th, our GDP was down negative 0.6%. We are in a recession. But it's interesting because the TV is not, the talking heads on TV are not admitting it. Another thing of doing your own work, it's not following a newsletter. It's not following a trading service. It's not listening to what's on TV. It's doing your own homework. There are no dependable outlets of what's happening. It's a sales game. How long can we keep you on our TV to sell advertising? How long can we keep you listening to CNBC or Fox or Bloomberg? It's a game to keep you hooked in. Do your own research. The big recession is supposed to come in 2023. Well, what's a big recession? What's a deep recession? Are we in a shallow recession? Will it last for 6 quarters? Will it last for 3 years? Well, right now, so if I was to ask you right now, what are causes to our recession? This is the softball pitch, a slow softball. What are the causes for our recession right now? Okay. I like it. 4 of you typed that in quicker than quick. It's like you guys knew what I was going to say. But there's more to that. What are our causes of inflation? Excuse me, our recession. Because it's more than just inflation. Fed, love it. That's an excellent one. Fed are the hope of controlling the inflation, which really equals higher interest rates, right? Which equals higher prices, which equals stronger dollar, which equals less overseas sales, which equals higher input costs to make the product. It's funny because Jim Kohler says overspending. So if I can just be so kind, I'm just going to type in here government. Can't type at all. Government, right? huge cause of our recession. Shutting down some of our energy lines, and we could also go well, okay, it's kind of weird because the same person just put product shortages. Is actually the product shortages seem to be linked to fuel, energy, and fuel, energy, and oh, how did I just do this? Product chips, right? We're finding out there's a glut of inventory. And we just found out from Nike, there's a glut of inventory on wafers. There's a glut of inventory on materials. There's a glut of inventory on steel. You know what's kind of weird? Remember when Ukraine was hit. I'm gonna kind of, let's keep going here. When Ukraine was hit, we were expecting fertilizer, primarily potash, right? But you know what's really garbage? There's not a decrease in potash. It's not there. There's plenty of potash. There's supposed to be with Ukraine, there's supposed to be a wheat shortage. There's not a wheat shortage, so I might as well go ahead and put in here the Ukraine-Russia war, right? That's definitely a cause of a recession. Hurting Europe more so than us. There's a growth recession in China. China can't grow. Out in the West, there's a water recession out West where Western products are not growing. Glad to hear everyone that I've been talking to has been safe back East. Always good to hear you guys are okay. So, plain and simple expectation. If you guys were to ask me, how am I trading? Currently starting to take put protection off. And actually I can't say will nibble on adding some more shares. But we're not going all in. We're not going all in. And yes, we still have some spider long puts in play that we will try to take off here in the near future for some profit. Someone asked me, Kevin, I can't believe you're talking bad about CNBC, Fox News. All I'm going to say is there are different opinions on every side of things. Bank of America last week basically gave a downgrade to Apple, yet that same day, Rosenblatt, which is a nobody, gave a disagreement with Bank of America from their research and Morgan Stanley agreed with him. So it's very interesting. Who do you believe? Comes back to doing your own work. I disagree with Bank of America's numbers on Apple, because if you try to get the max, the 14 max, Sprint and T-Mobile are out 6 to 8 weeks right now. There is a demand for the more expensive phones. Well, Kevin, there's not the demand for the least expensive phones, which I agree. The best way to say it is those that make less money are more financially challenged when you're spending your money on gas to get to work. Some food has gone up. You're more financially challenged, that the last thing you're going to do is go buy a new car, go buy a new iPhone. You're not going to spend money on the more expensive phones. You're going to have what you have last and stretch longer. Kevin, that's not good. They're going to sell less iPhones. Yes, they're going to sell less low margin iPhones and still sell a great amount of the higher margin iPhones. It's not a losing situation for Apple. That's part of doing your own work. I'm really taking up a lot of time today. An interesting article about why I think we probably could finish this year down 25% or more. The Fed's preferred gauge of inflation is showing that it's going higher, and that's the PCE prices. That is primarily what the Fed is using. It's what they've used for years. It's different than the PPI and CPI. It's very interesting to see. I think we're in trouble. You don't fight the Fed. People ask me all the time about understanding Bank of America's downgrade. It's all right here for you. A very interesting article. I will get this posted sometime tomorrow with Dave's help. Very interesting article, so you can see what Bank of America thinks. If the fourth quarter starts now, it's not looking good for the economy. For those that are a little worried or don't understand recession, here it is right here. This is your recession article on why things are going to have the bottom fall out. I found a very interesting article on Tim Cook and 4 traits that he looks for hiring people. Again, they're not what you think. His 4 traits are the ability to collaborate, creativity, curiosity, and expertise. So plain simple, I'm not very creative. I'm not very curious. I don't mind collaborating, but I do have people prove themselves. I get like 1.5 stars out of the 4 stars that Steve Cook looks for. It looks like I'm not working for Apple anytime in the near future. And then I have all of the Dow tumbles, the day by day for September. If you want to take a look at some things that happened, and again, a great recessionary information, here it is all right here. I'm going to give you guys what we're looking at as we judge ourselves at the end of the month, as we go through our day by day information on how we're doing, what we need to change. If our best educated decision is not working, how we're going to do things different. With that said, what questions do you guys have? Alan, I know you're here with some questions. I tried to spend that time going over what we went over Thursday and sharpening it a little bit. I know both Dave and David, you were there. Jim Kohler, I think you were there last week. on Thursday. If some of you would like to throw some questions in that maybe I did not answer in relation to last Thursday, please let me know. Kevin, what do you do for 8 hours a day? Well, again, I'm up an hour and a half to check the futures, and I check positions as a whole to make sure that if we have something down big that we're okay and we're covered. You know, Alan, you're like, oh my gosh, why did you take off Apple? And then you're like, oh my gosh, on Thursday, you know, it's going back up. I'm glad you took it off. And then on Friday, you're like, well, should you have had those, you know, reposition the puts on Apple? And then Apple got downgraded and the market fell out. Yes, I mean, please don't think there's an algorithm or a social science that allows me to explain everything that's happening. We're just taking a look bit by bit so we can try to do the best we can. In all reality, there's some things that have gone down that have been best of breed that have huge upside potential. That's primarily what we're in. If I could take just a quick minute to go through, and I did this again back in January, right? Apple can very easily hit that $200 to $250 range, right? Boeing, if you work Boeing's numbers, they should be $300 a share. Bank of America is traded as high as 55, trading at 31. Baidu, mathematically, could be a $425 stock. Huge upside potential on a stock that's trading at $119 because the US and China don't like each other. Their numbers keep going up. Costco could be a $605 stock trading at $477. Disney is at least a $225 stock trading at $97.30. Ford is a $25 stock, which really is 20. You could make a range for 27. I don't know Google L. JP Morgan should be a $220 stock. Coke is at least $65. Micron is again $145 to $150 stock trading at $51.95. Starbucks trade as high as 120. It's trading at 85. I don't know if it is worth that. Square, here's an interesting one. Square is not a $300 stock, but it definitely, for its numbers and small business coming back, it should be in that $180 range, and it's trading at $56.15. Under Armour, a $22 stock trading at $7.01 because Nike has an oversupply of inventory. Visa, $290 stock, at least $250, trading at $181. There's a lot of positions that if you just take their future multiple and extend it out, there are a lot of great opportunities on some stocks that are cheap with some huge upside potential. Jim, it would probably be better for me to call you tomorrow, if that will work for you. Yes, so if you're asking how I calculated those, just go back to the January 8th or 10th. Let me go and find it. It's on the myhurleyinvestment.com. And it was the January 11th, probably, the January 4th or 11th, that I went through calculating PE ratios and what's there. So that's how I'm coming up with these numbers. Some of those have changed. You'll notice, well, Kevin, you had some higher numbers back then. Yes, the PE multiples have changed. Some of them are just going back to their highs, though, so this isn't rocket science. Any other questions you guys have? All right, guys. Hey, I'm going to appreciate, well, I appreciate you guys all being here. With that said, I've got a 7 o'clock I got to get to, so I'm going to make a quick call. Jim, I'll give you a call really quick. I don't see any other questions coming in. If you do have any other questions, please send me an email, khurley@hurleyinvestments.com, and we'll do the best we can that I can get those questions answered for you. Guys, take care. Have a wonderful night. Look forward to seeing you next Monday. Bye-bye.